Hey, everybody. Thanks for checking into our latest TDR Traded Black podcast. Happy Thursday morning. Busy week as earnings seasons continues. Yesterday, AYR Wellness reported the latest earnings. Some people felt good. Some people had some questions and concerns, but we're here to address those questions by bringing in their CEO. So we're going to jump into it in just a moment. Let's first bring in TDR co-host Anthony Vrell. Happy Thursday morning and a busy week, to say the least, as we keep on rolling along.
Very busy, very busy. We've had a lot of the majors report. Obviously, it's always a good conversation having David on to talk earnings. I'm pumped to actually jump into the numbers.
Yes, saying that, let's bring in CEO of AYR Wellness, David Goubert, back to the podcast. Happy Thursday morning. How's your week been?
Hi.
You're fielding
Yeah.
a lot of calls right now.
Yeah. Well, thanks for having me. And yeah, it's a busy week and happy to be with you guys.
Yeah, I know. Onwards and upwards for this industry. And I know, look, there's some mixed feelings about your latest earnings. I look at it as like this is a marathon, not a sprint. You know, the importance of obviously more states going live is going to expand this industry. But let's dive into your latest numbers, which included revenue for the quarter came in 117.3 million, which was slightly down from the previous quarter, however, up from same time last year. Gross profit, 47.4 million, again down from 50.7 from the previous quarter and 56.6 from a year ago. And adjusted EBITDA came in at 25.7 million, and adjusted EBITDA margin came in at 21.9%. So first question I wanted to ask, like we all know these growth states that are important, but outside of Ohio, are we looking at, you quoted as saying, we're down slightly from the previous quarter. You described it as wholesale pricing pressure, tightening consumer wallets from inflation, and margin pressure in select markets. So how do you improve your position in the recent scaled and established markets outside of Washington, outside of Ohio, as I mentioned earlier?
Yeah. So, yeah, I mean, hey, looking at the results of the quarter, I'm not going to sugarcoat. Like it's not the results, especially from maybe that standpoint that we're looking for and that I expected.
Yeah.
So we're below our expectations from an EBITDA standpoint. Say from a revenue standpoint, slightly down quarter over quarter to what you said. Would have preferred to be a couple of points up or 3 points up, but it's not a huge difference on revenue. And I think the place where I'm not very happy with the results is on the EBITDA. So I'll come back to that. More to your question, I think clearly for us the growth is, to your point, coming from for the coming quarters coming from Ohio. Big hopes about Florida. I'm sure we'll talk about it. And hopes on Pennsylvania as well. So we have a lot of potential in front of us with these things. That said, I mean, we need to continue to do better on the existing markets and comp the pressure that we're seeing on pricing with improvements both on the top line and on the margin front. So that's the reality. What I would say is part of what hit us on Q2 is that some of the progress that we're doing, especially in operations, and I can dig into that if you want state by state, but some of the progress that we're doing in operations don't yet show up in the margin that we have because the cost of goods impacts later than actually the actions that are happening.
Fair enough.
Especially in Florida and true in other states. And so it's a bit of a one step backwards, two step forward situation, I would say, for Q2. So not happy about it. At the same time, not making like oh my god, it's the end of the world at all. But below the expectation that we had from an EBITDA standpoint, mainly because of that pressure on pricing. I could name New Jersey on that front, a couple of other states. I think Nevada, for example, with the change of the limits that people can buy, the limits went up. That had some impact in the fact that they're buying a bit more, but it's with lower margin. So we get some impacts like that in different states. And I'm confident with the work that we're doing, especially on operations with the new COO that arrived in November. A lot of actions that George is taking in the different states, and that is will be paying off midterm, but in some cases get us to again take a bit of a one step back before taking the steps forward.
Okay, fair enough.
When you're talking about consumer spending tightening, are there any certain trends that you can, I guess, that you're seeing in the numbers? Is it a basket size reduction? Is it a reduction in transaction frequency? Like, what's really attributing to that, if you've been able to identify what that is?
We didn't see that much of a reduction from a frequency standpoint. When I look at our transactions were slightly up quarter over quarter. I think 2% up quarter over quarter, which means despite some states where transactions were a bit tougher, like New Jersey because of the competition that's coming up, and Nevada was a bit down also on transactions because people are buying more when they come as the allotment is higher. But overall transactions, which is new customers, but also the frequency of existing customers, right? That is rather on trend. From a basket size, we saw I'd say stability. Basket size for me was a big issue in 2023, meaning that when I look at the average transaction drop in 23, it was 17% in the year. And we said, hey, it's going to be a major focus for us in 24 to make sure that we maintain the basket size to where it was at the end of 23 and don't face the same thing in 24. I would say year to date, we're exactly there. We're maintaining basket size. So overall basket size is maintaining. What people have done us to do, I think, is actually going to a lower price product. And we're comping that by actually working with our bartenders and our retail team in increasing selling skills. So the basket size itself did not decrease. I think it's down 2% this quarter to last quarter, but it was up 2% last quarter to Q4. So overall, it's kind of flat year to date. But it's flat with people buying less expensive products, and us compensating that by actually offsetting that by actually selling more products. So focusing very much on how do you get multiple item sales instead of single item sales. And that goes by training the bartenders. So back to the initial question, I think it's a tightening of the wallet with actually from a downsizing from a product standpoint for the consumer. And what we're trying to do is offsetting that by higher selling skills and better customer experience.
Yeah.
Okay. And then you had also mentioned margin acceleration going into the second half of 2024 on the call. What's the strategy to achieve that from just an overall product mix perspective and just an overall numbers perspective to capture the delta in the margin to the upside?
Yeah. So there's different things that play into that. One obviously is more linked to Ohio and the fact that Ohio turning adult gives us higher margin. And that's going to play to the overall margin for the company as Ohio increase in the mix. And then from a margin standpoint, I'd say some of the big things are rather in the operational improvements. So if I take Florida as an example, right? What we've been doing in Q1 since the beginning of the year and end of last year, but mainly since the beginning of the year, is improving our cultivation capacity by reducing the height of the lights, for example, changing on the nutrients, stuff like that. We also did a lot of automation on gummies. Like we multiplied by 9, I think, our capacity on gummies, but that went by automation of the gummies. Same thing on pre-rolls, same thing on packaging of flour. But these things don't, I mean, it takes a bit of that step forward because before 2-step forward on making that happen. And we cost goods every end of quarter, which means that all these products that were done with a better automation in Q2, it doesn't reflect yet in what we're selling right now. So that's where we're saying there's a bit of a time frame difference between price compression and the things we see that hit us and our ability to improve our cost of goods.
So the expansion of new states is extremely important, as you've indicated. So the
Huge.
current states, what are you seeing as far as consumer reach? Are we still seeing a lot of new customers? Are we getting to a point now where it's just, I looked at Ohio, when we were there yesterday, and I looked at the medical count, and it's been relatively flat for the last number of years, around 165,000 the medical
Yeah.
program. But we're seeing obviously exponential growth once they go adult use. But when it comes to a lot of the current states that you're in right now, are we still seeing growth as far as consumers in general?
I think it's very much a state by state story,
Yeah,
right?
I hear you.
So, if you take states that are truly mature, and even in the mature states, I would say it's different. So, if you take Nevada, for example, I'd say that we do see new customers, but it's a state that is very, very high in percentage of existing customers. So, it's a matter of really working on that frequency
Yep.
and maintaining our retention of customers. If I take another mature market as Massachusetts, I think that there's many people still in Boston that don't know about our stores, and we still see a lot of new customers in that state, despite having been there for a while now. So it's different. Then if you take New Jersey, I actually think that the fact that there's way more dispensaries today is open up the door to more customers and new customers that come to our stores in New Jersey. And if I go state by state like that, it's going to be very different. Now, when you were talking about medical, and I'm going to take Florida as an example,
Yeah.
what we saw clearly in Florida in the past few weeks and few months is a sharp decrease in new customers, new medical card holders,
Yeah.
and new customers, because people are waiting for the vote in November, and they're not getting their cards right now as
Interesting.
they're waiting for that. So it's really a state by state situation.
Yeah. Yeah.
Uh, as a focus for us, we're really focused on both, meaning increasing the frequency and making sure that we retain better our customers,
Yeah.
and at the same time gaining new customers. I would say the biggest impact is actually on the retention and the frequency of existing customers, except in states that are in their phase of high growth, I'd say.
We've entered a
Uh,
stage where the competition's fierce, right?
Yeah, again, varies state by state and how many dispensaries are in the states. I mean, the Massachusetts is probably the most competitive state, among the most competitive states that we have. With you can have only three dispensaries in adult out of almost 400 now in the states. So that's highly competitive. Other states, even Nevada, stays actually pretty stable with only 100 and what is it, 115 dispensaries.
it's
So yes, there's competition, but it's not that huge competition. New Jersey is the one that has the most change from a landscape
yeah.
standpoint, right? We're moving from 30 something not too long ago to now we're already at 150 dispensaries. So here again, it's this business is so specific state by state.
So how would you define New Jersey right now as it relates to the air business? We've heard across the board from yourself and your and your peers that we've seen a drop in retail sales, which
Yeah,
was inevitable by the saturation of retailers coming online. That then gives you a leg up from a
yeah.
wholesale perspective to get on as many shelves as possible. Like, where do you see New Jersey going, or stable, or becoming to a point of stabilization
Yeah.
in the future?
Yeah. So what we've seen so far is obviously a pressure on the retail side, on the
Mhm.
dispensaries that we have, less than we expected actually, and I'd say it's a single digit decrease in transactions,
Okay.
but it's a double digit decrease in revenue because there's price compression at the same time with
Mhm.
newcomers that want to win the business, and will go lower in prices and so on. So from a retail standpoint, I think that we maintain a market share that's higher than what we expected the market share to be at right now.
Okay.
But it's still impacting negatively the
Yeah.
revenue, and it's impacting negatively the margin because you're on a bit of a lower price. But to your point, at the same time, there's growth in wholesale that so far more than compensated the decrease in retail
Okay.
because of the large opening of dispensaries. I think there's a bit of a moment where I don't think that all these new dispensaries are selling as much as they were expecting to sell,
Yeah.
and I think their vault are pretty full for many of them right now. So there may be a moment that will be a moment of where wholesale is not as big as it may have been in most recent months. But I also think that it's very temporary, because if you look at the sales per capita in versus the population in New Jersey, and you compare that to mature states, it's still much lower,
Yeah.
especially when you look at it in biomass. But even in dollar, it's like half, I think, when you bring that to the 21-year-old plus population of New Jersey, number of and sales that we see based on the total state sales. And you look at that, and I think it's not even half yet of what it is in a mature market. So I think New Jersey has a great future. I
Okay.
think that the new dispensaries, has a bit of a maybe harder time than expected in growing the sales at the beginning. But I think that's a state that has a great future in more than doubling the sales that they have today overall in the state.
So you would see it
Mm.
more as like, or you not see it, but you would define it now as New Jersey's going through some growing pains. We kind of expected this, and stabilization and future growth is on the horizon
Is on the
for that
horizon
market.
from a wholesale standpoint
Okay.
mainly, and I think that we have three great locations. I think in New Jersey,
Mhm.
love those three stores, and I think that they are doing a great job at maintaining as much as they can their business. And here again, and I also think that as there's more dispensaries, back to your question about new customers, more
Yeah.
people are actually trying and getting into cannabis.
Yeah.
Hmm.
And then going down to Florida, that's a very
Yeah,
important part of your story. You
yeah,
had the big announcement with IPR. They were willing to put 30 million into the construction of that facility, which is a testament to the quality of the asset. How
yeah,
is the indoor grow progressing? I mean, are you on schedule as far as timelines go?
yeah,
And do you have a target store count for the state of Florida?
yeah.
Let's say ahead of adult use or ahead of that facility coming online.
Got it. So that facility is super important for us. And let's forget adult use for one sec.
Mhm.
Even as a medical market, if you look at where we're right now, our market share in flower is about half of our market share on oil,
Yeah.
with the 64 stores that we have today, and we're selling all the weed that we have, right? So
Right.
we are limited in what we can sell in flower right
Mhm.
now in the state in the existing stores that we have, and we do not have indoor grow quality flower yet. And we're the only large MSO or large player in Florida that doesn't. So
Yeah.
even as a medical market, we need that facility, because we need to be able to catch up on the mix and on our market share on flower. And we also need to be able to propose to our customers and new customers, going after new customers, an indoor quality flower. So
Okay.
that to us, even as a medical market, it was the needed, I'd say, move for us to have indoor flower. To your question about the facility, yes, we're on timing. We're in the process of getting all the permits and so on, starting construction very soon, planning on being done by Q2, first harvest in Q3 next year. So all
Okay.
that is on
Okay.
schedule, going well. So now let's turn on adult use and growth of stores. And by the way, as a medical market, we're planning on being at about 70 stores, 69, 70 stores at the end of this year.
Okay.
And we'll continue growing next year. Now, flip that as turning as a adult market, which we feel good
Yeah. Yeah.
about that, right? About the decision in November. Um, Turn as an adult market, we think that the number of stores will continue to grow. We want to maintain our market share in number of stores.
Yeah.
So
Okay.
today we have exactly 10% of the stores. We want to stay at 10% of the stores. If we think that by end of 26, let's call it, right, 2 years from now, there's 1,000 stores in the state of Florida, which is very possible.
Possible.
We're gonna want to be at 100 stores. So our plan is going from 70 at the end of this year to 100 by end of 26. And for that, we absolutely need also that facility, because we're actually doubling our capacity in flower by adding the Ocala facility. So
Okay.
we're very, very excited about that.
And
Just another
is the
chapter.
strategy going to be to is the strategy to increase sales in Florida going to be to go to those consumers that are heavily buying the oils and other products from you right now and cross-selling in that high-quality indoor flower to eventually drive sales and then bring in new consumers that are currently going to other dispensaries?
Yeah, I think it's both. I think it's
Okay.
both. Frankly, is having the quality of flower that, if you look at the price of flower in Florida, right? We're priced, and we have tier flowers depending on THC, but we're priced between high 20s and let's say 19, something like that, for the lowest price on
Yep.
flower,
Yeah.
and indoor can go in the 40s. So
It goes high. It goes higher than that. I'm
it goes
buying
even
it.
higher. I agree. It goes even
Trust me,
higher than that. Yeah.
I'm buying it. You've got guys
Yeah.
like Sunburn and the Flowery that they don't budge on price, and
No.
I
Yeah.
mean they're selling $60 eighths
and and
right
uh,
now.
and our goal is to go after that as well.
Yeah.
So to your point, it's going to be both to offer that to our existing customers,
Mhm.
but it's also to go after customers like you
Yeah.
that enjoy an eighth at $50.
Yeah.
And we feel very good that with the team that we have and the investment, that's a significant investment. You were quoting the 30 million is the
Mhm.
investment that is to build inside the building. We're buying the building, and the IPR with us, we're buying the
Yeah.
building and putting 30 million into that within the next 12 months. That's to get that quality of flower. So here again, it's growing with existing customers and going after new customers in Florida.
How do you see Ohio expanding? Because obviously, with the framework and how it's structured, it's pretty much an even playing field for a lot of companies in that space. But in order to gain market share and see it kind of unrolling, like, and basically developing over the next year or so, like, how do you see that developing that state?
Yeah, we're super excited and very bullish about Ohio. I mean, it's the first for us. It's the first state in the history of AYR when we are here the first day of an adult use.
Yeah.
And it's also, we like to say that, but we have only 16 stores overall today in our whole network of 93 stores, 94 now. We have only 16 adult use. We're planning on getting to 8, which is right now the limit possible in Ohio.
Yep.
We're planning on getting to 8 stores as soon as we can, and
Yep.
I'll tell you more about timing. But we have only 16 adult stores right now. Just Ohio turning 8 adult stores. We're adding 50% adult stores to our current number of stores. That alone is huge. The other thing in Ohio for us is we have a pretty large facility, an cultivation facility, and right now we already increased to 8 rooms at double stack,
Yep.
and that gets us only to 50% of the capacity of that facility. So we can
Right.
go triple stack, and we have more rooms, which means that we intend to be a big player on the wholesale side in Ohio. So our plan there is very much to get to 8 stores. We have 3 open. They did great
Mhm.
yesterday. We plan to be at 8 as soon as we can, which is some will open in Q4 of this year, some will open in Q1 of next year. By
Yep.
the end of Q1, we should be at 8. Of
Okay.
Q1 25, we should be at 8. They're all already located. They're all approved. We're actually putting shovel to the ground next week, I think, and others will come. So we're really ahead of the game. I mean, the team did an awesome job, I think, preparing us for Ohio. So very bullish on that front. I think that
It's gonna be a big
today
market.
it's a
It's gonna be
hundred
a big.
something. It's a hundred something, low hundred stores. So I think that for the next 6 months they're going to do amazing. I expect that as new stores open, there's going to be a bit
Yeah.
of a cannibalization. But when you look at number of stores again versus the population of Ohio, we're super bullish about that state on the retail side. And then our goal is to take a very large market share on the wholesale side because we have a very large cultivation. And now that we have our 2 hero brands ready, meaning Kind and Haze, and we're putting a lot of form factors into those 2 brands, that should definitely help us from a wholesale orders, but even more wholesale sell through by supporting the dispensaries.
Yeah. Well, judging by the reaction I saw yesterday in Cincinnati, Dayton, Akron, Canton, and Sandusky, and putting 1,000 miles on my vehicle and seeing a lot of farmland. There's not a lot to do in Ohio, so I think it's going to be a very strong market for cannabis because the reaction was very positive. And speaking of that, how was the first day? Just the reaction from the team.
The reaction was super positive. The team was so excited yesterday. They worked their butt off for 12 plus hours nonstop. We always had people queuing in the three stores even before we opened. Um,
What kind of
they did,
percentage increase did you see
yeah,
in foot traffic at some of the locations now that you went live with adult use?
yeah. So we did in one day what we were doing before in 1 week.
Okay.
Okay.
So 700% growth. Keep in mind, our medical stores are pretty new. We opened the three of them in November, so they're not the top stores of the state. But yeah, great day. I mean, 700% growth. It was better than
Expected.
expected.
Yeah.
Now, okay, it's one day, right? So we're
Yeah.
gonna see how it is in the coming days and coming weeks. But could not have expected anything better,
Now,
especially considering that you still can't do any marketing in Ohio. So it's really
but here's the positive thing. I
yeah,
think every local television network that was in these different cities was all there. And when you're there, that's going to bring awareness. And if you're up 700% in one day, that's going to
yeah.
stick with a lot of people's minds. There was people I was speaking to in parking lots that weren't even aware. One lady in particular, and actually she didn't even know adult use went live. And she had a friend that was suffering from cancer, and she elected to
Mhm.
go into one of these dispensary locations. But word of mouth, and I think coverage, obviously, from these local media companies is only going to excel that market. But I think all in all, it was a great day for the overall industry.
And here
Yeah.
again, I think the team did a great job from that standpoint. I think we had like 20 TV coverage between yesterday and this morning. So yeah, very excited about that
Yeah.
stage. And for us, that's one example. We're using that very much. We'll learn from it. We're using it as one example of what we have to do. Meaning, as we were saying earlier, if you look at our network of stores, 77 stores out of 93 are medical. Obviously, Florida and Pennsylvania. I mean,
Yep.
Florida, we're bullish about that, very, very bullish. And we think Pennsylvania has a very good chance to turn adult in early 25, not in 24, but in early 25. So
Yeah.
that's something also that we're getting ready for.
Are there plans to deploy capex into Pennsylvania and grow out that store count ahead of that potential adult use conversion, or kind of wait for more sound
Yeah,
guidance from the powers that be before
yeah, no,
going deeper?
we feel that we're in a pretty good place where we are in Pennsylvania right now. So from a cultivation standpoint, we have two sites there, so we have a good volume, good capacity, and don't plan much capex on that front.
Okay.
More maybe some capex on kitchen and extraction stuff like that, but we have those are small numbers. And then we have 9 stores. They're all ready for adult from a space vault, all that.
Okay.
No clear plan on adding more dispensaries in the near future, and we'll be watching and seeing what we can do there. But feeling good that we have the right, I'd say, infrastructure between the retail and operations to do very well in Pennsylvania with that terms.
Just another chapter in the cannabis book where it's titled Hurry Up Already. All these things that are just pending right now, but I've never seen an industry that's so dependent on politicians. But I'm sure it's exciting, but also could be equally as frustrating because if you and I and Anthony are having this conversation 6 months from now, where you have Ohio in full swing, Pennsylvania greenlight adult use along with Florida, this is a completely different story. But, the story itself now is still strong, but I think there's some clarity just with the latest numbers. But I think it's pretty common that a lot of people are seeing fundamentally right now. It's just we need some growth states to go live. Ohio is a step in the right direction. Just need some of this other pending news to keep going. So,
Yeah, I mean, that, we got to work with what we have ahead of in front of us right now, right?
yeah,
So as a team, we need to be heads down, grinding, and making sure that we're free cash flow positive with the environment that we have today, and at the same time being ready for all this. And to your point, I can't wait to be end of 25 or 26 with hopefully all
Yeah.
that done and behind us. That's a totally different world. Totally different world. I mean,
Very much so.
and the company doesn't look at all the same.
And you knew all this was coming on your day when you interviewed for the job, right?
Man, I never imagined. I love it. By the way, I love it.
Yeah.
I think it's such a hard industry, and man, there's days that you're like, what the hell am I doing here? But overall, I love it. I had no clue of what I was getting into, frankly.
I
No
hear
clue.
that everywhere. We're all crazy, David, but it's a good crazy. Even the people I
Yeah.
spoke to yesterday, everybody's like, I don't know how I got into this. You know, one guy worked at Microsoft, now he's in cannabis. And it's just like, yeah, it's fascinating to hear these stories because let's face it, people are in traditional industries prior to this, but one thing's for sure, it's exciting. You get really polarized by the overall industry because you see the potential and the growth opportunities that lie ahead. That's what keeps you going, right?
And the other thing you were mentioning earlier to me is so important. You were saying, "Hey, I met that woman in the parking lot, and she has a friend that has cancer, and she came in because she knew she could help." Uh,
Yeah.
Yeah.
and I think that we're at the same time into that high growth industry, really with amazing potential, and at the same time in a very purpose-led, purpose-driven industry. And for me, that's the mix that makes it so exciting.
Yeah. Well, listen, great to catch up, Anthony. That's it for me. Everything else you want to touch on, or you're good?
Covered on all the points. I mean, we touched on a lot of the major markets, a lot of the color points on the story, and now it's looking forward to the next couple of quarters and seeing the story progress.
Uh,
Yeah.
that sounds good to me. And heads down, grinding,
Yeah.
and making sure we're heading in the right direction.
Yeah. Let's keep in touch and keep us posted on Ohio. Curious to see how that expands too.
Appreciate it. Thank
All
you,
right.
Will.
Thanks,
Thank you,
David.
sir.
Appreciate your time.
Thanks.
Hey everyone, thanks for watching our latest podcast. What'd you all think? Is there any information that we're missing? Is there anything you want us to cover? As these industries heat up, we're getting access to more and more big hosts. So let us know the questions that you want us to ask for you. As usual, smash that like button. We want this to go viral. Click on that bell for all notifications for the latest interviews that we're doing. And as usual, let's build this community. Subscribe to our channel because we appreciate it, because we wouldn't be here without you. Thanks for watching, everyone.